what do you look like? Of course, I'm not talking about generally the markets, but the Indian economy as a whole, where a recent conglomerate business owner also recently quoted and said that India's market cap will reach from, which is currently close to $4 trillion to $40 trillion by 2047, when we complete 100 years of our independence, which is close to 23 years from now. So what's your view on that? Can we reach there, or what are the speed breakers that you see? And what's your larger view on the Indian economy as a whole?
Yeah, I've seen in at least my experience of 25, 27 years in markets where I've been confronted with the economy, is there is never a one-way direction. There are years where the economy picks up steam, there are decisive steps, there are bold reforms, companies take advantage of that, profits inflect, certain sectors emerge very strong. And then there are equally, years in between where there's an economic lull, either because of global factors or because of domestic factors. There are macroeconomic phases when our currency doesn't do well, when the country goes through high amount of inflation. So there will be good and bad times, is what I want to highlight. 40 trillion or not, I don't know. And according to me, it may not matter as an investor. And that's why I don't want to confuse myself with a number which is too far out, because even if I say that okay, we will touch 40 trillion, and if we don't touch, what will you and I do? We can't do much about it. So even if you look at US is today I think at $28 trillion. So at some point they were 4 trillion like we were, and I think they've done a credible job as an economy to achieve what they've created global companies, right? Not just domestic companies. So I think India has to aim for building global companies if it has to increase profit pool. How do you increase profit pool? Not by selling only to Indians, where the per capita is currently low and gradually rising, but also selling elsewhere where per capita is higher. So as we globalize more, our odds improve, because it's unlikely that only by being a domestic economy would we necessarily achieve the ambitions and aspirations we have. So we have to build global scale, for which we have to build global capabilities, and a lot of ingredients are now falling in place, or at least the government has a blueprint. It is talking of a 2047 plan. There are targets given to ministries. At least there is a blueprint, which is a very positive shift, or an encouraging shift. But do these things happen one way? No, they will always have a cycle. So coming back, so when US was at 4 trillion, I think it was at around 25-30 years back, similar tenor as we are talking. 90s mein they were at 4 trillion, and now they've reached 28. So let's assume we have the same template. In the next 25 years, we'll also reach 28, 30, 35. That journey for them has delivered around 10.5% on S&P 500. Which if you convert, that's dollar return. If you convert that into
plus
rupee,
3%.
plus 3, so that's around 14% return. So from a return point of view, what we will earn is closer to what the ROE of corporate India is, independent of some of these big macro numbers. And I want investors to recognize that. कि पैसा कितना बनता है? Economic growth rate is not necessarily connected to stock market returns. China has grown fast, but 30-year returns are zero. So do we wonder that अगर हमारा भी growth हुआ और market return could be zero, anything can happen. So US with this growth also has delivered 11% return, plus 3% currency, 14. India's 30-year return is also 14% as a stock market. If you take Sensex over since 93 till today, it's roughly around 14% long-term return. So median returns are closer to 14%. ROE of corporate India, if you take good and bad times, good times you go to 20% ROE, bad times you go to 12%. If you weighted average, everything comes to around 14-15%. So from all lens that you look at it, around 12 to 14% return is a reasonable assumption that you can make. Anything more is bonus.
So for that, like you're saying, the journey from 1 to a 0.5 to 4 can be done by internalizing good processes and building domestic companies. But if you have to grow from 4 to 40, you have to globalize your processes.
I'm assuming, look at China's template. If China, I think, is at 16 or 17 trillion.
Close to 20.
No doubt they have their own local economy, which is where per capita is high, so huge consumption locally as well. They have large scale. So we also can achieve that scale because the population is there.
Right.
But population doesn't always mean more profits, because that population has to be a wealthy population. They need more jobs. Their savings has to be large so that their spending is meaningful. But China also exports to the world. So it has to be a combination of both.
Right. Okay.
So I think, as I said, the ingredients are there. Odds are in our favor. luck is there, thought process is there. So we should not just make self goals to not achieve this objective. But even if we achieve that objective, our return expectation should be reasonable. Is the only point I would add.
Got it. But still, you are largely bullish on the fact that one's own portfolio, for the larger part of the portfolio, equity should consist of a larger share in their personal portfolio when we talk about 10, 20, 30-year goals.
So here, let me answer this more conceptually and not necessarily connecting to the India story, etc. Because conceptually, equity ownership is owning businesses and participating in profit pools of businesses. That is the fundamental concept. And generally, at large, it is at least 100-year history shows that in good countries, stocks outperform inflation. So what do we need with our money? We need our money's purchasing power to grow.
Right.
And most often the purchasing power has grown if you are in the right set of equity asset class. But there are times, and this is somewhere even I get confused, when I look at more data always confuses you. But there are enough countries which have not earned more than gold returns, for example. 24 out of 25 emerging market countries, in their local currency terms, their stock markets have not outperformed gold.
Okay.
So there are cycles and phases like this also, and hence the only point I want to add is never make anything as a line cast in stone.
Got it.
While at large, equity is the best asset class, which will help us,
Beat
increase
inflation.
purchasing power and beat inflation and compound our money at large. But there can be that small probability of something not working out.
Got it.
Because there are enough countries in the world which have goofed up and they've not been able to create wealth for their citizens.
Which can happen with us also, albeit with a smaller probability, right?
Yeah.
So like we were talking about, these kind of probabilities and, being in China, even though the GDP is increasing, the returns are not, right? Whereas staying the same in US, it grew, right?
Because the ROEs didn't happen. So US has 18% ROE. China doesn't have ROE. China ROEs are low. So they've put a lot of capital. There is profit growth, but that's not reflecting in quality. So the return on capital has been very poor. Capital efficiency has been very poor, and that is one of the reasons why in investing these rules of capital efficiency become very important.
Right.